When I was young, I thought that money was the most important thing in life. Now that I'm old, I know that it is. This is not my thought. Someone famous said it, but it holds true. Now, even though money is not the key to happiness, knowing how to manage it wise is very important. Today, I will be volunteering at the 9th Financial Planning Day in San Francisco. It's an annual event that happens every year in October. This year, the event is organized at the San Francisco Public Library, and I'm so excited to help at this event. This is truly an exciting experience. It's a free event, so anyone is welcome to attend and take advantage of high quality advice. So let me tell you what it's all about. At the event, there are educational workshops on topics like tax planning, college planning, investing, basics, budgeting, funding, affordable housing options, and so on. You can even get your will prepared and signed at one of the estate planning workshops. The most valuable is an opportunity to get a 30 minutes free consultation with a certified financial planner. All the planners are certified financial planners, or CFPs, which means they have met high professional standards and have agreed to adhere to the principles of integrity, objectivity, competence, fairness, confidentiality, and diligence when dealing with clients. If you can't make it this year, mark your calendar for the next year. Also, feel free to like, share this video, and subscribe to our channel, Let's Talk Money. We have quite a few educational videos on the personal finance topics, so feel free to stay with us and learn. Okay, now that you are subscribed, here's a sneak peek at what's happening here at the library.
That investment should be. So in the 401k question, depending on how far out you are from retirement, if you have more than 10 years until retirement, there's a good chance that you can take a decent amount of what we would refer to as risk in that portfolio. Risk typically means stocks as opposed to bonds. So in retirement accounts, we tend to see those more oriented towards long-term growth, more allocated towards stock markets, whereas investments outside of your retirement plans, you really have to ask that question, what's the time frame on this? As Jenny already mentioned, if this is an expense that you might need in the next 1 to 3 years, then you want to be careful with, if it's invested in the stock market and you're hoping to buy a house in 2 years, well, the point at which housing prices come down and become affordable quite likely might coincide with the market being down, and therefore that money that you're planning to use is now lower. So maybe that was better to be set aside in a more conservative bond portfolio or at the bank in a higher yield savings account. And as interest rates go up, there's more to be said for investing in a normal savings account.
And I would just add, as far as the where, when you're choosing a financial institution, you can first look at the question, am I more comfortable having somebody help me with this? In which case you might contact a financial advisor. Then another question might be, do I want to be able to walk into an office to deal with someone, or am I fine just doing it online? So those are some of the preliminary questions to ask yourself.
Okay, so I figured out that maybe I want to go to the bank where I already trust somebody and ask about it, but they're probably going to come back to me with, you can invest in all of these different things. What are some of these different vehicles that you might use for investing, and what do those look like?
So for shorter term investments, as Brian already mentioned, there are CDs and higher yielding savings accounts. Then, then we go a little bit more out on the risk scale, so you can buy bonds, individual bonds, and those are loans to various entities, and they can be as safe as invested in treasury bonds or inflation protected bonds. From there, invest in individual stocks. Also mutual funds, which are baskets of individual stocks, bonds, or a combination of both. And then there are exchange traded funds, which are mutual funds that are traded like stocks.
So Jenny just kind of covered the spectrum there. What I would say is that when investing, there's often an allure to invest in individual stocks. Something it's fun to see. I invested in Apple and they went through the roof, or I've got a friend who invested in Facebook early on and has made a boatload of money. And kind of it's great to understand that story of an individual company. But when it comes to kind of a prudent investment strategy, we really emphasize diversification. And so the easiest way to achieve that diversification is through mutual funds or ETFs, these exchange traded funds, that give you, with one single purchase, you can own 100 stocks or 1,000 stocks. And in the US, internationally, you can buy a single fund that's the total stock market. And that's an easy way to get diversification. And while you give up the 10 times return that you would get with one of these high-flying tech companies, you also avoid the Enron scenario where you invested in this one company and maybe it had a great story, but ultimately it turns out to be a fraud and goes to zero. And that diversification will really smooth the ride, not only protecting you from one-off risks, but also a big piece of investing is kind of behavioral. So how much volatility can you tolerate? When something goes down, are you going to be inclined to sell it because you don't want to lose any more money? With a diversified basket of stocks or bonds through a mutual fund, it's likely to be a smoother ride, and it becomes easier for any one of us, kind of individuals and even professionals, to stick to a plan over time.
It doesn't matter what genders spouses are, they can take advantage of the married filing joint tables, which generally is less expensive than filing separately. I saw a hand up there, yes. Pardon me?
What are the pros and cons of as a man and filing jointly or
Okay, so what are the pros and cons of filing jointly versus filing separately? Pros and cons. So sometimes we advise people to file separately because let's say one spouse is less responsible than the other one. And so I don't want to be on the hook for his taxes, so I'm going to just take care of my taxes. I'll pay my taxes and he can take care of what his situation is. If you marry somebody and that person has outstanding tax bills and you file jointly and you have refunds, the IRS is going to keep that refund to cover the back taxes. And you're going to say, well, that's not fair. This is my money paying for his back taxes. So by filing separately, you get to keep your refund and the other spouse is responsible for their taxes. So that could be a consideration of people owing back taxes. Also though, you might have one spouse that might have higher deductions than the other one. And we'll go over an example of that in a later slide. For example, medical expenses. So we have to run the numbers to see which one makes the most sense.